good morning, good afternoon, good evening, wherever you might be. Today I'm going to talk about some market shorts or a market short. But before I get into my short idea, I think it's important to set up the macro backdrop as well as go over some market structure. So, CPI, the one theme to rule them all. We've had continuous CPI expansion. CPI hitting 9% this last print. I think it's a 40-year high. PPI, same story. Continuous month-on-month expansion of year-over-year growth. PMI, contracting. 2s and 10s going down. This, along with a bunch of other factors, which I won't get into just for the sake of time, has led to a bear market. We're in a bear market. We troughed about a month ago, and we've gone up a little bit, but we are in a bear market nonetheless. I thought being in a bear market was bad, and then I took a look at the consumer. It's pretty dire. The consumer is in a really bad state. 51.1 was the last print. The print prior was at 50. Consumer expectations not doing any better. It's still a pretty dire situation. So with all of this in mind, if you look at market structure, market breadth, this chart here shows the percentage of stocks above the 50-day moving average. And as you can see, we've had a pretty good spike in the last month, but it's clearly on a downward trajectory. This chart shows here the number of stocks represented as a percentage hitting all-time highs compared to all-time lows. Again, we've had a spike in the last month and a half, but I'm pretty sure that has to do with the rally because as you can see, we are in a downward trajectory. Now, if we start to look at the market from a TA perspective, we've been in this downward channel. This is the ES, by the way. I think it's a better representation because these futures contracts trade 23 hours a day. But anyways, we've been breaking a little bit the channel here at the high end. Can we continue to break higher? Yes, we can. Also, for full disclosure, I wrote this up 2 days ago, so prices are a little bit different today. NASDAQ, same story. Continuously on this downward channel. Can we continue to break to the upside a little bit? Yes, we can. Can we go down? Of course. The pink line here is pre-COVID highs. If we continue on the downward trajectory, we'll probably get to pre-COVID highs, maybe somewhere mid-August, late September. So, with all of this in mind, with this macro backdrop in mind, rates going higher, CPI going high, consumer in a bad state, it led me to my short idea. Roblox. Now, what is Roblox? Roblox is essentially a video game company with an embedded metaverse play. The biggest competitor to Roblox is Minecraft, if you know that video game. And I would consider Roblox a Minecraft 2.0. Now let's go on to some metrics. Revenue. They've had pretty fantastic revenue growth. They're supposed to go almost to $3 billion this year and a tad over $3 billion next year. Earnings, or lack thereof, they're estimated to lose $1.04 this year. And you can see here, the chart, they're not going to make any money, or they're estimated not to make any money, even all the way out to 2025. Because of the lack of earnings, the best way I've found to value this is through price to sales. The sector that I created with all the relevant stocks above $1 billion, it gave me a price to sales with this year's forward sales around 4.5. Roblox is trading a bit over 11.5, but like I said, these are from 2 days ago, so this is a little bit out of date. So Roblox still has a premium valuation. It's down about 85% from peak to trough. Now, it troughed on May 10th and has been rallying a little bit since. Well, not just a little bit, quite a big bit in percentage terms. It's had over an 85% rally. I say over an 85% rally because, like I said, I wrote this up 2 days ago. And in today's numbers, it's had an over 85% rally. Now, let's get into some KPIs. Daily active users and hours engaged. These are the KPIs, or two of the most important KPIs in regards to their user base. Daily active users, they've killed it. If you look at the last 3 quarters, quarter on quarter, they've been growing every quarter. On a year-on-year basis, they've continued to smash it. And if you think that's impressive, hours engaged, it's ridiculous. Hours engaged, it's denominated in millions. So when it says 2,000 there at the bottom, that's actually 2 billion. It's ridiculous. Now, this is a short idea, so you might be asking yourself, why the heck would you be wanting to short something like this that it has daily active users smashing it, hours smashing it? This is essentially a startup, so they don't really need to make money right now. And I would argue that's the old paradigm. If this was 2020, I would agree with you and I'd be long this. But times have changed, and we're going to move on to some other KPIs because they have some other relevant KPIs. But before we go on to that, this is the tech wreck of 2000-2003. The NASDAQ composite. So, bear market rallies. As you can see here in the first 3 markers I have, 24%, 37%, and 24% respectively. I think the only reason this stock has gone up over 85% is because we've had a bear market rally. If we look at their average bookings per user and their total bookings, so this is the money that they make, the monetization that they have on their users, it's been going into the negative in a year-over-year basis. So they're not growing their bookings anymore. If you see their average bookings per user, it's going down to about 24% in this last quarter, and their overall bookings going to the negative as well. So this company is not making any money. And if you remember from the last slide, or not the last slide, but one of the prior slides, it's estimated that still in 2025, this company is not going to make any money. And I think people agree with me that the only reason this company has rallied in the last bit is because of the bear market rally. It's sitting with short interest at 11.1%, and that's come down a little bit, but I think that just has to do with the bear market rally and people having to cover some of their shorts because, well, it's gone up over 85%. Now, trade structures and catalysts. I honestly believe this company is still going to rally a bit. I can easily see it reaching its resistance level around $53. If it gets to there and starts to exhaust itself, I would definitely consider putting on a vertical put spread. This is not something that I would just want to short outright because it could just have a massive short squeeze. So this is something I would definitely look to playing it via just support and resistance. So like I said, if it reaches around 53, I would look to see if it exhausts itself around that level and then put on a vertical put spread of 50 to maybe 35 put spread, Or if you really want to be punchy, maybe straight up 45 calendar. But really, I think my price target for this stock is really around the mid 25s. If you give this a forward sales of 5.5 times, you get around a mid 20s price target. Oh, I get a mid 20s price target. So that's really where I would look to cover my short if it gets to around $53. So this is me just scratching the surface on this stock. There's a lot more that I go into depth with when I'm just analyzing a stock for myself. I have a massive Excel sheet. But this is just something, like I said, scratching the surface, a bit of the macro backdrop, a bit about the stock. There's a lot more about Roblox. Very interesting company. But I want to be short things that are not going to make money now or don't seem to be making money anytime in the near future either. I want profits now compared to profits later. And if you look at that short interest chart, I think people would agree with me. Anyways, thanks for listening, guys. Let's go out there and make some money. Cheers.